Good evening. Good morning, everyone. Seems like evening. I've been at this for a while this morning. Welcome to the morning homework session and pre-market analysis and trade level setup for January the 10th. It's a Friday, TGIF. This is Quantum Leap. We are a self-organized learning environment. We have a private Skype room. If you're new here from Twitter or watching the YouTube video, we have a Skype room that we've been running for over 4 years now. You'll need a Skype account if you want to come in and check it out. You can send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Each morning we come together to do our homework and set our trade level setups. And then I also run a live trade room as well. If you're interested in that, you can give me a contact request and we can talk about it. I need to get the legals out of the way. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether your futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Okay. With that said, obviously with non-farm payroll, overnight we drifted up to that CHVN up at 42, and then non-farm payroll spiked us down. They hit a fairly big miss, and now they've rotated back up towards the overnight VPOC up here at 37 area. We'll get into all of this, but what we need to do is start with our regular session. Just let's take a look at the numbers. We've been keeping this homework sheet. We do that because we watch a whole bunch of different levels based on a bunch of different methodologies, and the end result of that is we put out what we call a QLTP, which is our guide sheet to give you an idea where key levels are going to be or confluence levels are going to be between different methodologies. And this is printed out as a one-page sheet that you can have as a reference guide on your desk, so you know as you're coming into areas like we're coming up to into this 39-40 area, we know where others might activate in a trade based on whatever the methodology they're looking at. So if it's part of the Quantum Leap chat room, it's put out every night by our fearless person by the name of Howard. Okay, but what I want to do is just take a look and see if there's anything that's glaringly. Obviously, the year high is no longer 1840.75. It is now, what did we spike up to? Sorry. What did we spike up to? It is now 42.50 is our year high. Of course, our all-time high is still up here at 1846.50. And we are currently trading just about at the year open. So right now, the bears and the bulls are fighting it out to whether or not we get into a positive year or remain in the negative year that we were trading in. So those are the things I'm looking at in the micro numbers. Let's go take a look at the intraday. Yesterday in Globex we opened at 1831.75, had a high of 39, low of 28.75. Then we opened auction outer range, just outside of that range from the prior day at 36.75. Over a 2-point opening swing. We had a 6.5-point IB. Kind of a mixed bag. I mean, we talked about this in the live room yesterday of all the clues they were giving us of it being a rotational day, and it certainly was a big rotational day. We had a make and break on the IB at 9:33, so you can see that we're coming back into our normal pocket of setting the IB the first hour high and low, and then breaking it within the first 15 minutes. It's 3 days in a row. Now, the highest overall time that an initial balance is going to be broken is in the first 15 minutes, what we call the pocket. And then the second highest probability is the second 15 minutes, which is we had shifted to, to breaking later, in the late part of the year and the early part of this year. So now it looks like we're coming back into some normalcy. In terms of value area, oh, come on, I can't operate my sheets today. Value area was kind of a mixed bag. I mean, we've been overlapping value for several days, and that 33.75 has been, you can see, it's been our value area high for 3 days running, and this 33.75, 34 area is becoming extremely important to watch, and we'll go through why a little bit later on. Of course, our daily report, let's put in our full session high, so 1842.50, and what was our low so far? 829. 1829. Sorry, I'm a little bit late getting everything done because of the NFP and wanting to trade it. All right, so we have full session ATR targets to the upside, 1843.25, to the low side, 1828.25. Those are based on the 20-day ATR targets, and then we'll get our RTH ATR targets. Right now, 20-day ATR is running 1144, so we'll see where we end up with our targets for the RTH. I don't think they're going to be much different than what the full session are. Of course, we just had non-farm payroll, and Canadian unemployment gave us the spike down, and now we're moving up. We don't have any really big news after this except for wholesale inventories at 9. So just keep an eye out for the first half hour and don't get caught. Let's take a look at the macro to the micro in terms of the trend and where we are. You can see very strong trend on the monthly, good slope and separation on the 9 EMA and the 20 SMA. Prices paralleling, trend is intact on the monthly. On the weekly, same thing. We'd come down, seen a little bit of weakness, but popped up, and currently, trading above. Got a little bit of a tech gap right here, but not much. I mean, that should be closed through time rather than through price. On the daily, you can see that we are finally getting, after coming down and closing that tech gap, we're getting price paralleling, and we're getting slope again. We had lost our slope. We are getting our slope. And we've got a fairly decent trend going here on the daily. And just, did a fib extension for on the last swing low, and targets above. We already hit the 40. 52.75 for the 38.2, 63.75 for the 50, and 1874.75 for the 61.8, with 100% up here at 1910, which would put in another rule of 10 if we test that 1900. Over on the geometric chart, we're holding the center line of the new fork that I added this week, and currently testing the upper line of the opposing downward sloping fork. So if we break out of the downward sloping fork, a move to test the upper line of the the smaller time frame upward sloping chart is going to give us a move to 1865.75 area, and that would be coming up and testing the long-term fork that we've been following for many months. Give us a test again to the center line of that one. But other than that, really doesn't give us much more information. A move down to test the center line again today of the smaller upward sloping fork will give us a move down to 1826.25. Let's take a look at the big picture. Let's probably the most interesting. So right now, we're still inside of the larger microcomposite that goes from December 23rd through to yesterday. We're just trying to break back out of the the 6-day microcomposite. All value is come in line right here. I mean, we've got anywhere from 1831 to 1832.75 where they've really determined fair value right here. So you can see the reason I put this this last smaller microcomposite in for the last 4 days is just wanted to show you how we created this nice bell curve. Okay, as we fought and rotated back and forth trying to determine fair value between, remember when we started this week, we said that the three main areas that we'd be watching would be this 25 to 27, the 175 to 32 and a quarter, 30 and 36 and a quarter, with an outlier being up at 42. And we fought back and forth all week until they finally determined that 32 area is the most accepted price within this larger balance area. And now we've got a little bit of a breakout going. They're trying to get through this 37.75. If they can break back through here, I'd be looking for a rotation up through to test that 40 level again, and then push through to that 42. We touched it in the Globex. Globex high now is 42.50. Our Globex low is, what was the Globex low? 29, I believe it was. So right down on the other side of this balance. But really, everything, and I drew this, I wanted to show you just, this is just a mock-up I did just to give you an idea. We've got the major magnet here. You can see all the overlapping value within the last 6 days here, and then you've got very defined areas of long-term and short-term price rejection with very distinguished targets now. So even though we haven't been up in this area for very long, this area is now representing some clear targets and some clear entry points. And it doesn't have to get much more complicated than that. And I was just commenting before we got on here that I took the long above this 34 with the idea that we come back and revisit the move from last night. Overall inventory was long overnight, and all I'm doing really when I'm taking an entry is I'm looking to get in and get funded by the next area of price acceptance, which I did, and then hoping that we get a continuation and they can break through the next area of price rejection and continue the move up. And it would be the same thing if we broke back below 34. If we got back below 34, then I'd be looking for rotating back to this major magnet in between, that 31 and 32.75, really 32 and a quarter being the major target, with a hope that we would continue down to test the other side of balance at 29.50 and break through, and then repeat the cycle. But it's the simplicity of how I trade this to go from an area of long-term price rejection that corresponds with short-term price rejection, with the idea that I'm going to get in and get funded, or scaled, with the rotation back to the closest area of price acceptance above or below that point, with the hope to continuation to the other side of that balance and a breakthrough and a continuation in the direction that I'm trading. And I'll use the smaller rotations to add on to those positions at those areas of price rejection. So I'll put this in the room a little bit later on. It's it's kind of goofy looking, but it's goofy looking because it's simplistic. I'm just looking for those those areas to give me an edge, know where I'm wrong quickly, and hope that I get in, get funded, and continue the the move up. So right now, I'm hoping that we can stay above this 37.75 because 37.75 gives us a push through to the other side of balance here, at 40.75. And if I wanted to, I could look to, try to get in and get funded on another trade. The only problem is not enough room, to get scaled. I need at least 3 ticks to get scaled. So if I got long at, say, 38, the price acceptance right there at 38.50s doesn't give me the opportunity to add here. But I will hold on to the trade, hoping that we get the continuation. So taking a look at the overnight, let's get our overnight numbers moved over to our chart, and then we'll get our levels set up. So we have, overnight low of 29. Oh, don't do this to me again. Overnight low. And overnight high of 42.50. And currently, which I don't think is going to shift, our VPOC is 37.50, right at the range high from, basically right at the range high from yesterday and where we're trading right now. So the market is finding balance in around that 37 overnight VPOC, and we're likely, going to open just above or just below the range high from yesterday. So in terms of areas to do business, 34 is going to be my main area to do business. That's, this, value area. High, again, has become a very important area of, resistance and support, and it's also right there at that key CLVN. So my main area to do business is going to be off of this 34, really 33 to 33.75 to 34.25 is where I'm going to be looking. And these are yesterday's swings. Take those off. The other area I'm going to be looking to do business is at this 40.75 CLVN. I'll be looking for responsive sellers to step in here to try to pull us back down into range and inside value again. But if we break back out of that 40.75, I'm looking for them to go take out the overnight high and this naked VPOC at 42. And then we've got those naked crosses at 43.75 with the major target above at 46.50, which is our all-time high. Below 34, everything shifts to watching a rotation back down to this 32. I mean, these are great levels, gang, to be able to trade off of right now. These are lining up. Even though we haven't had any real long-term, composite or price acceptance and rejection to go by, this is lining up really nice, and it's really starting to respect the levels. So the other side of balance is where I want to be looking to do business, and that's down here at that 29.50, where we have our overnight low. So this 29.50, and you can see we had kind of a triple distribution. It was interesting in the room because yesterday morning, after we made the move down and we started filling in this lower area, I asked our room, what the probability was, and the answer was a break back above 29 and a repair of what was ugliness or a very sloppy auction up here. I even drew where I thought what the profile would look like, and I did that I think it was even before noon, and the rest of the day played out perfectly. I didn't trade it very well. I only had one trade all day because I had distractions, but the market told us and showed us and guided us on exactly what was going to happen. Anyway, I'm getting off point here. Okay, so 29 is going to be my other area, and then down here at the 24, 23.50 CLVN is going to be, it's lining up perfectly. you can't get much better than that. So currently right now trading above the 34, and I'm looking for a move to break out of the range and push through to the other side of that balance around 38.50 at the CLVN at 40.75 with a push through to take out the overnight high, naked VPOC, naked cross, and hopefully, continue on and make a new high. Don't know if that's going to play out, but that's my main hypothesis, and that's what I'm trading right now until we get back down below 34. Below 34, then I'd be looking for a rotation back to close the gap at 32.50 and come back down into this 32. Now, we do have to be wary of the point that we've got these wicks down here, and we got stuck in this wick 2 days ago. Yesterday we got stuck in this lower wick for the morning, and then broke out in the afternoon. We have to be wary of a possibility, especially with the weak news that we got with non-farm payroll, that we could come back down and get stuck in the wicks down here. This is improperly auctioned territory, and there is a possibility that we come down and get stuck in the wicks in the lower side. So below 34, I'm looking for a rotation back towards 32 with hopefully a continuation down to 29, and then if we can't hold 29 area and they can't find responsive buyers stepping in to keep us in the upper distribution, then I'd be looking for a move down into the lower distribution and a move down to test the value area low at 27.25 with a push through to the other side of balance in the range low at 24. Below that, the naked close and naked cross down here at 20.50 and 20.25. It's right here, right at the CHVN at 20.25 with a push through. The other area, the last area I'll be looking to do business is down here at that 17.75, which was that 18.25 that we were trading off of earlier this week, and then looking for whether or not buyers step in here to hold us above. This is really a major line in the sand for me, because below this I think we're going to come back down and revisit testing the 1800s. Below 1875, look for a move down to that naked cross and CHVN at 1814 with there's a CLVN at 12.25, but really it's 1807 you have to be watching for, because that's the range high from the prior microcomposite balance that we broke out of, and the last most accepted price before they broke out was this 1802.50, but the big target below is still this 1781.50. We get back into the 1700s, I think we're going to have to come down here to visit this 81.50 to find any buyers with conviction. So that's what I'm looking at in terms of the ES. Let's just take a quick look and see how that looks like on the Keltner channel. So 38.50 tested the upper Keltner line. Obviously CHVN above that 37. This could set up as a double Renko reversal. If we come up and close above the upper Keltner line, we could get a nice walk the line up to 42. This is setting up actually not too bad for a Keltner upper line walk. Test of the mid-Keltner is going to bring us down to 33 area, but really by the time we get there it's probably going to be 32.50, 32.25, and then test of the lower Keltner line will take us down to test that 29 area. By the time we get there it'll probably be around 29, 29.50. So you can see how the Keltner channel lines up for that. As long as we stay above, this 33, 34 area, well, you want to stay long and look for the possibility of continuation of the move up. Looking at gold, we talked about gold yesterday and holding that 18. They have been holding the 18. Current microcomposite VPOC is around 26. We're still in this this distribution zone between it's expanded out. It was 37 and 18. Now it's 44 and 37. As long as we stay above 37, look for a continuation up to test the range high and that value area high from the other older, larger value area that we broke out of at 48.10, and then move above that, same targets up above, the 50, 54, 57, 30 is the microcomposite VPOC. So I'm not expecting much more than a move up there. Possibly a push through to the other side of balance up here at 64.70. But if we get below the 37 CLVN, look for a rotation down to that 32 area again. So you got 32 and 26 below us with 18 on the other side of balance. Below 18, everything shifts back down to this, you got the 1230 with value area high and the range low from the current microcomposite. And then below that, it's back down to that 1203.30 microcomposite VPOC, which basically started this whole thing and where we came back down to. And then below that, we get below the 1200s, same targets, 92, 72, and the big one below at 60.80. So that's everything I got. Howard, are you prepared to do anything this morning, or are you still trying to catch up?
I can give a brief overview.
Okay, over to you then.
So I'll start with a quick peek at our daily chart. So we made our high of the, not high of the year anymore, so our all-time high at 1846.50. And since then we had a gap down to open the year, and we came down that first day to close right at the 9 EMA on the daily. Then we had follow through for the next 2 days to close below the 9 EMA, which we had not done for a while, since back on December 17th. And then we closed back above, and so far we've tested but failed to close below the 9 EMA the next few days after that. So the 9 EMA is providing good support after being challenged so far on the daily. So now let's take a look at advanced declines and up-down volume. That's part of our market breadth. And we can see, let's shrink this up a little bit. Now we can see on these two indicators, the middle chart being advanced declines on a 10-day average basis, and the bottom chart being up volume versus down volume on a 10-day average basis. Blue is NYSE and the red is NASDAQ. That we peaked back on October 22nd. And since then, there's been a pretty steady decline up until December 11th, and then we had a retrace, but we have not set a new high in either of these indicators. We came close on up volume versus down volume, but did not make a new high. So we still have a non-confirmation in terms of these measures versus the market. And then once we hit our high of the year, which came a couple days after the peak of the up-down and advanced declines, the advanced decline breadth started waning again. And as of yesterday, both were just above the break-even level of 50%. So 50% represents equilibrium between advancers and decliners and between up volume versus down volume. So right now we are just above the break-even level. So let's take a look at the sectors. Since we started a new year, I've reset my starting point to be the beginning of the year, so we don't have a lot of history that we're looking at currently. So to start the year, healthcare has started very strong. It's up over 2% already since the start of the year. Financials are also strong, up over 1%, but all the other sectors so far are below the year open, which, you know, is to be expected since the market is below its year open. So again, we're just getting started with this year, so we'll see how all these indicators play out as the year progresses. But the weakest ones so far are home builders and retail. And through most of last year, retail had been the strongest, I think, ended in the lead for the year. We'll look at the transports versus industrials, and again, this will start as of the beginning of the year. Transports led pretty much all last year. And we started a little bit lower than the industrials, but you can see, it's got a higher beta activity than the industrials. Industrials relatively flat. Transports has moved back up ahead of the industrials, but both are still below the open of the year here, by less than 1%. Let's just take a quick peek at the futures. See how they're starting the year. So far the strongest looks to be gold and silver. The red is gold, the green is silver. These labels are off a little bit. Weakest by far so far is crude. It's down already 6% on the year. Most of the futures are clustered right around the break-even level, just a little bit below. And bonds are also showing some strength to start the year. I'll take one last look. It's a little bit of a late look, but we haven't looked at it yet this week. That's the COT report. So we can see, this is with data from last week that we, set our high up here in the ES, which is the red line. And over the last 3 weeks, the blue line here represents the large specs. They've been increasing their long position. The yellow is the small specs. They've been decreasing their long position and are actually just slightly net short. They have minus 14,000 and change contracts net short. And the commercials have been pretty much flat over the last couple months. So that's all I've got, Doug. I'll turn it back over to you.
Thanks, Harry. All right, so we're currently trading 35.75. We're going to be opening up likely inside a range, but above the middle distribution that has that 34. 34, very key level. If we get below 34, look for a move down to the 32 and a quarter area. Take out the naked VPOC, naked cross. At that point in time, look for buyers to start coming in between there and 29.50 and hold us up in the middle distribution, and then a rotation back up and through to test the range high. Possibly take out the overnight low first at 29. But if they stay above 34, look for the breakout of above that 37.75, 38 range high, and then a move up to test the 40.75 area, and possibly through to take out the overnight high, naked VPOC and naked cross up there, all at 42. If they get below 29, then I think we'll see some more weakness come in, and I think we'll see a move back down towards that 25.50 again, and test these range lows, 26 and a quarter, 25.50, and 24 and a quarter. So I'd be looking to come down and test these, and if they get through that 24 and a quarter, 23.50, I can take this off now. If they get below that 23.50, then 22.75, but the real target below that is down here at the 20 and a quarter and 20.50 to close out that gap that we left. Anyway, that's going to be our homework session for this morning. As always, trade well, trade safe, and we'll catch you on the flip side.